Alright, so today we see the SPY, QQQ, and many other stocks collapsing, including stocks that are on my personal radar. Now, we have a few questions in mind. For instance, is this move an overreaction? Is the market oversold right now? Will we see a recovery next week? If not, how far can the market fall? Well, I believe these are the main questions of the moment, and we will try to answer them in today's video using technical analysis, facts, statistics to define the main turning points and the strategies to be used next. So, welcome to the Finance Hydra channel. If you don't know me, my name is Nathan, and I highly appreciate your audience, my dear friends. Let's study the market together. So, as we can see here, the SPY is having a very rough time around the 21-day exponential moving average over here, which is acting as a reliable resistance level for us. It did work 2 days ago, yesterday, and today again. All these times we failed miserably in breaking this key point. Therefore, SPY's most important resistance level is the 21-day EMA. Only by breaking and closing above this key point, SPY will turn bullish again, or at least it is gonna enter bullish territory again. All right, we have another interesting key point over here, the $544, which was the previous gap level over here, which failed in acting as a support level for now at least, but if SPY breaks and closes above this key point, then it might have a chance of recovering, because this key point over here is not only a gap support, but it is also very close to the 38.2% Fibonacci's retracement over here. So this area is a double support level for the SPY. If SPY is going to react, we gotta see a reaction as soon as possible around this support level. If it fails in holding around this double support level, then okay, the next Fibonacci's retracement is around the 50%, which is very close to the current price right now, $537, but honestly, I believe we could seek even lower levels like the 61.8% retracement, $530. That's gonna be our most important and dangerous support level on SPY. All right, on the bright side, on the weekly chart, we are very close to the 21-week EMA over here, which is also another important support level. So, in addition to the 38.2% Fibonacci's retracement, in addition to the gap support at $544, we see the 21-week EMA over here. Therefore, this entire area is a triple support level in multiple time frames. So this is why I'm telling you guys, if you're gonna see SPY reacting, now the timing would be just perfect. What's the problem? The problem is that we don't see any meaningful bottom signal here yet. There is not a single bullish reaction on SPY. Today's bar is a massive bearish candlestick pattern over here, and there is not a single bullish reaction, all right? Which is a shame. If we see one, that's gonna be very interesting. It might be a very important one. It might turn SPY really bullish again, but again, guys, trading is reactive. It is not predictive. We can't predict the future. We gotta react to what we see right here, right now. And as long as we don't see a meaningful bullish reaction, SPY will maintain the bearish bias. This is not even me saying, all right? Charles Dow, the father of technical analysis, founder of the Wall Street Journal, founder of the Dow Jones Index, said in his tenet number 6, I believe, trends persist until a clear reversal occurs. Do we see a clear reversal on SPY, on QQQ right now? No. Therefore, the bearish bias will most likely persist. Now, the trend is insanely bearish on the QQQ. We are below the 21-day EMA. We are below the $465 over here, which did act as a resistance level for us yesterday. And right now, apparently, we are seeking lower support levels. We almost hit the 61.8% Fibonacci's retracement over here. And again, just like on SPY, if we see a bullish reaction around this area, great, phenomenal. But we don't see one. Nathan, what if we lose the 61.8% Fibonacci's retracement? Then the QQQ is going to materialize a sharper correction on the weekly chart over here, possibly back to the lower support level of this ascending channel. The situation is very simple over here, all right? The QQQ is still in a bull trend, long-term speaking, on the weekly chart. Medium-term speaking, on the daily chart, we are very bearish. But if we do react above our support levels over here, we could resume the bullish bias over here on the daily chart and possibly seek higher levels. But right now, there is not a meaningful bullish reaction yet. Now, Nvidia, just like SPY, just like the QQQ, is very bearish right now. We are rejecting yesterday's bullish candlestick pattern. It was a very promising bullish reaction indeed, but since we failed in triggering this bottom signal over here, Nvidia will probably maintain the bearish bias. Its next technical support level is $97.40, which is better seen on the weekly chart over here. A previous top level 1-2 times, and right now it is acting as a support level over here last month, and most likely is gonna act as a support level again. Nathan, what if we see a bullish reaction over here on the weekly chart? Great, Nvidia will maintain the bullish bias. Nathan, what if we lose the $97? If we lose the $97, Nvidia could trigger a bearish pivot point over here for the first time since 2022. In this scenario, its next technical support level will be $75.61. So let's be very, very careful around this area. Pay extra attention to this support level around $97. And what's the key point Nvidia has to break in order to turn bullish again? The 21-day EMA. So far, we are still below this key point. We are not reacting. There is not a single bottom signal over here, period. Now, Tesla. This one is very interesting because unlike the indices, unlike Nvidia, Tesla did trigger. Yesterday, Tesla triggered a bullish pivot point. It did. A classic higher high, higher low, right? We closed above the $228. But right now, today, we are not only collapsing, we are rejecting yesterday's bullish candlestick pattern. We are losing the $228, and we are on the verge of losing the 21-day EMA as well, making a very, very bearish reaction. This candlestick pattern over here has a name, all right? It is a bearish engulfing candlestick pattern, which let me show to you guys over here, which according to Bukowski studies, well, it acts as a bearish reversal pattern 79% of the time. It is a bearish reversal in theory, and it is a bearish reversal in practice as well. And of course, the above numbers are based on hundreds of perfect trades. Bukowski website, thepatternsight.com. If you want to learn more about candlestick patterns, statistics, etc., just take a look at his website. It is not a paid promotion, all right? I just like his books very, very much. I'm a bookworm, and I read all of his books. Now, here, Tesla is collapsing, bearish engulfing candlestick pattern. It is a bearish reversal structure roughly 80% of the time. However, in order for this candlestick pattern, in order for this pattern to get triggered, Tesla has to lose and close below today's low. Then we're gonna materialize a sharper correction. The last bearish engulfing we saw occurred here on the QQQ on this day over here. One of my haters complained in the following day because we went up, right, more than 1%, and then, oh, Nathan, are you sure this is a bearish reversal 79% of the time? LOL. Well, my friend, it has to trigger this pattern over here, all right? And well, by the moment the QQQ triggered this bearish engulfing, it simply collapsed to the current levels right here, right now. Therefore, it is a quite reliable bearish candlestick pattern. This one was the last bearish engulfing I saw that I remember, and right now we see another bearish engulfing here on Tesla stock. If it triggers, we could collapse and seek lower levels. In this scenario, the 206 area, the 200 support level over here, probably it is not gonna be a reliable support area because this pattern is very strong, it is very reliable, and we could seek even lower levels like the $182 if we actually materialize, if we actually frustrate the idea of a bullish pivot point over here. That's gonna be a very bearish scenario for Tesla. Now you may ask, Nathan, what it takes for Tesla to reject this bearish bias? Because there is a chance, right? If we don't trigger this bearish engulfing, we could avoid a sharper correction. You are totally right. What's more, by rejecting today's bar, meaning if Tesla breaks and closes above today's high, which is roughly around $233, which is a very important resistance level as we have been warning here on this channel, by rejecting this candlestick pattern over here, this massive bearish bar, Tesla will probably explode next. In this scenario, the $265 up here is going to be an easy target to work with because it is going to frustrate a very, very intense bearish reaction. The bears over here would be in a very delicate situation if suddenly Tesla reacts and closes above this candlestick's high over here. That would be extremely frustrating. They will probably be stopped out over here, and Tesla could easily explode. Do you want to know what could happen to Tesla next? Let me show it to you guys. This is what could happen to Tesla next. Recently, we did trade NIO over here. NIO did a bullish harami over here above a double bottom as seen on the weekly chart, and by rejecting this bar over here, just like Tesla, right? Just like Tesla has a massive bearish candlestick bar, we see a bearish bar over here on NIO as well. By rejecting this key point, by breaking and closing above the $4, which is this candle's high, NIO triggered a very interesting, impressive buy signal. It simply broke our first target around the $4.62, and right now it is going up, well, more than almost 26% in less than one single week. And if you want to trade with me, then check out my website, link in the video's description. There I will teach you guys how to trade. I will teach you guys all the techniques that I use, and you will keep in touch with my personal insights, with my personal trading strategies. This is one single example of a very successful trade we recently did, and I firmly believe that Tesla, by rejecting this candlestick pattern over here, we could see the same thing happening again. Therefore, let's pay extra attention around this $233 key resistance level. So remember, join the 5% project. Take a look at my website, link in the video's description. Learn to trade with us. Now, AMD, let's continue our study. AMD is this one simply failed miserably in reacting above the 61.8% Fibonacci's retracement. We don't see any meaningful bullish reaction. If we do see one, great, but right now there is not a single one. On the weekly chart, we did a top signal below the 21-week EMA, suggesting a sharper correction to the $121 next. However, the 134 over here, the 132 support level, is acting as a very nice price region, and it is preventing AMD's price from collapsing to lower levels along with the 61.8% retracements over here. So if we see a bullish reaction, I believe AMD will have a fantastic upside potential next. But unfortunately, there is none. So there is nothing to do over here. Nathan, what if I short Nvidia? Right now, in my humble opinion, AMD's risk-reward ratio is not interesting at all. Because, well, a good short was above here, around this top level, but it was above the 21 EMA, so we were in bullish territory. Now, if AMD bounces again and finds a top level around the 21 EMA, then okay, then we could short it, expecting a sharper pullback to the 121. But so far, I don't see nothing interesting going on over here. Guys, remember, remember, there's a time to go long, there's a time to go short, and there's a time to go fishing. These are not my words. This is Jess Livermore's words. One of the, if not the greatest trader that ever lived. So there's okay to do nothing sometimes, all right? We are here to make money. We are not here to actually to try to prove ourselves that we have to work, all right? I'm not here to show you guys work. I'm here to show you guys results, and that's okay to do nothing sometimes. Palantir stabilizing around the 21 EMA. Is there any meaningful bullish reaction? No, but if we see Palantir breaking today's high or breaking the $31.34 over here, which is this gap resistance level from 2021, we could see a nice bullish rally ahead because it is going to maintain the bull trend. It is reacting above the 21 EMA. It is above the support level made by the previous top level over here. Previous top level acting as a support level, another example of the principle of polarity in technical analysis. Therefore, there is a decent chance that Palantir will react from here, but we gotta wait for more confirmation first. Super microcomputer collapsing, about to retest $357, which is the previous top level seen on the weekly chart over here from August 2023. Right now, it could be our next support level, and honestly, if you ask me, I do believe we're gonna seek this support level next. There is not a meaningful bullish reaction over here. We are just collapsing. There is nothing to prevent super microcomputer from reaching $357 again. Therefore, let's pay attention on this support level. Now, Broadcom collapsing after earnings, right? Leaving a monster gap above the price. Do we see any bullish reaction? Of course not. It is just collapsing. However, let me do this. Let me try to understand a few lines over here because we are still bullish, all right? Long-term speaking, we are still in a bull trend. However, if we lose this purple trend line over here, I do see Broadcom not only frustrating the bullish bias, long-term speaking, but we would also trigger a bearish pivot point on the weekly chart, and just like Nvidia, would be the first bearish pivot point since 2022 over here. That's gonna be a very problematic situation for Broadcom. Therefore, it needs to react as soon as possible, preferably by Monday or Tuesday. Otherwise, we could frustrate and reject this long-term bullish sentiment over here. And Micron is about to retest the $84.91. I'm so sorry, it did hit. No, it didn't, all right? We are almost around this support level over here. If you ask me, this could be a possible double bottom chart pattern, all right? Right above this gap support level over here, right? So right now, the timing for a reaction on Micron would be perfect, but there is not a single meaningful technical evidence suggesting that we're gonna bounce. If we see one, great, but for now, there is none. Even if we see Micron bouncing, it is still in a bear trend over here. So any bounce to the 21-day EMA could be just a dead cat bounce. In order for Micron to actually reverse this bearish sentiment, it would be very interesting to see Micron triggering this double bottom chart pattern by breaking the peak between the two valleys around 110, and at the same time we would break the 21-week EMA over here. In this scenario, we have an upside of roughly 50% over here to retest our next technical resistance level, $157. There are no other resistance levels over here, so we have a lot of upside potential. Micron is a very promising one, but we gotta see a meaningful technical evidence suggesting a recovery. Otherwise, there is nothing for us to do. Of course, I'm gonna keep you guys updated every single day in this channel. Therefore, if you're not a subscriber, consider subscribing. It is, guys, it is too late for you. If you're still watching this video for 20 minutes, 19 minutes over here, it is too late for you. You did like the video, so come on, subscribe this channel and click the like button to support me as well. As I told you guys, I highly appreciate your audience. Thank you very much. See you guys next Monday. Stay safe. Bye bye.